everyone, and welcome to the API Chronicles Unlocking the Future, a live celebration of APIs hosted by Marquetta. And today we're talking about one of my favorite topics, which is the world of embedded finance, and talking about why payments are about to become part of all user journeys. This is live, so we will be taking questions in the comment sections from our audience. A bit of a tip for the questions: if you make them short, concise, and more importantly, a question, they will be more likely to be read out loud during this session. So my name is Elizabeth Lumley. I'm deputy editor at The Banker, and we have an excellent panel for you today. So I'm going to start with letting them introduce themselves. So Olivia, can you introduce yourself to our audience, please?
Hi, thanks, Liz. It's great to be here with everyone. My name's Olivia Minnick. I'm Senior Partnerships Manager at MMOB. MMOB is a universal adapter for APIs. So what we do is build embedded journeys across a large number of products and services that can be embedded into digital channels very, very quickly and easily through a snippet of code. So really excited to find out what the others are going to say on the panel.
Excellent, thank you. And Stu, please introduce yourself.
So I'm Stu Kofer, based in London, and I'm with a business called JP Morgan Payments, which is a part of JP Morgan that moves $9 trillion a day. And I'm on the payments product management team in London, and we cover about 100 payment methods in Europe, Middle East, and Africa. So I'm on a product management team here, and thrilled to be with you all. And thank you for including me.
Wonderful. And Lars, last but not least, please introduce yourself.
Yeah, hi Liz, hi everybody. Thanks for having me. My name is Lars. I'm based out of Berlin. I work at the moment as an independent consultant in the world of embedded finance. So I'm working with non-financial brands to build and launch financial products. On the side, I also write a newsletter around embedded finance and trying a few other things as well to help companies to understand what embedded finance really means.
Wonderful, thank you. So whenever I've talked with people or written about embedded finance, I mean, it's very interesting. One of the first questions that comes up is how you actually define it. And it seems like there are a lot of people in the industry that have different definitions of embedded finance, and whether it's exactly the same as banking as a service or payments as a service. So I really would like to get a flavor of how you define it and how it differs from traditional offering. So Lars, we left with you, so why don't we start with you for that? How do you define embedded payments?
I mean, like for me, embedded finance overall, I mean, the easiest definition is a non-financial company launching a financial product. So at the end of it, there are terms like banking as a service, embedded finance, embedded payments, and they're all kind of like go around the same thing, or describing it in different ways from different point of views. At the end of it, whenever a company who is not really a bank, not really a fintech, launching a financial product or in a way monetizing financial services, then what I would refer to as embedded finance.
Excellent, wonderful. So Stu, how do you give us your definition, please?
Well, I will plus one to Lars initially. I think, and so that's the same definition we have, financial things in non-financial places. But one of the key goals of that integration is to improve the customer experience of that non-financial counterparty, roping in, those customers that they have into the ecosystem, and maybe removing some historical friction in giving those people access to financial services.
Excellent, wonderful. And Olivia, please define it for us.
So I think it's great to hear I think a few years ago there were so many different answers, but I think we're a bit streamlined now. So I agree very much with Stu and Lars there. I would say it's being able to offer a financial product where a consumer needs it through a channel that they feel comfortable with and they trust, even if that's not necessarily a financial platform. I would also add that, it's the consumer being able to access, purchase and use that product all natively within, a digital channel. But in some cases, we're not quite there yet, which I'm sure we'll explore a bit later on as well.
So there we go. Our panel is in agreement. So audience, please bookmark this live stream so that you can easily access your definition of embedded finance in the future. So my next question is really, in what way can embedded finance disrupt and revolutionize existing financial systems and services? And actually, I want to add to that, like, does it even need to? But anyway, that's kind of my personal bias. Olivia, why don't we stay with you? Like, how can it kind of change and revolutionize traditional models?
Yeah, so I think a couple of my thoughts on that. I mean, I'm not sure if it's exactly revolutionize, but certainly definitely improve. The first point I'll make is around inclusion there. So as we've all said, it's offering products through different channels, and fintech as a whole has already gone some way into doing that. So, during the pandemic, you were able to access your banking from home. More people started to do that. Some people use fintech apps that wouldn't feel comfortable walking into a bank and asking for a loan, and they don't feel like that environment is catering to them. So it was interesting. I saw some data from ULend recently, which is an embedded lending business, that said female-led SMEs are actually far more likely to access finance through embedded solutions than through the more traditional models. And a lot of their customers as well, I think more than half, have come from more deprived regions in the UK. So I think it's people who may not realise a certain opportunity is open to them, maybe like a lending product, they can now access it. And I think in terms of the business models we have in fintech as well, the second point I would say is, we've had this problem where fintechs like challenger banks have got huge numbers of users and they've seen huge growth, but they've struggled to monetize it. So embedding products such as insurance products and credit from other parties can help them to focus on that. At the end of the day, how banks have always been making money. So I think those are the two things I think I see it really changing in the industry.
I'm going to have a follow-up question. It's kind of interesting. You talked about female entrepreneurs and people from maybe more disadvantaged backgrounds. Is that because the financial product is coming to them instead of them having to search out a financial product that they might need?
I think so, definitely. And I think that's something I see, especially in the small business space, is customers, you're running your small business. You don't always have time to sit and go, right, I'm going to Google what my options are for this, or I'm going to read up on it, or go and ask somebody in a suit in a financial institution that you don't really feel comfortable going and talking to. And I think if you see it, if you're using an accounting platform, for example, already, because you have to, unfortunately, to do all your accounts, and you start to see maybe more suitable insurance products, more suitable lending products that have been embedded within that, it just kind of opens up options that you maybe didn't know were available, but more importantly, probably didn't have the time to actually go and access from the source.
Interesting. So Stu, I'd love to hear your views on how embedded finance can change the industry.
Sure. And so firstly, Olivia, banker, not in a suit, hopefully approachable. I think one of the things that we notice, if you look at the way that you've interacted yourself as a consumer watching this, with platforms, it's changed how you interact with brands, how you consume products and services, and the way that you would expect new products to come to you, even if you don't expect that they come to you, those early mornings scrolling or those late evenings, and you think, wow, this is really, really fit for me. What luck. It's not really luck that you're being presented these services. And I think banking really needs to follow suit. So you've mentioned already, banking services have become hyper-personalized end to end. It's really, a brand understanding who they're talking to, what products and services are relevant, and that delivers an improved service expectation. It's really a wonderful thing. And so it comes from, this platform economy where we continue to interact with buyers, sellers that we don't know. And through the platform, we kind of obviate this trust, don't we, of the system and ecosystem we're a part of. So it can disrupt a couple of things. I know there's a lot more to the conversation here, but I'll stop there. I think this hyper-personalized experience is at the root.
Approachable bankers. I'm waiting for bankers on TikTok. Then we know we've hit the hype cycle. So Lars, what are your views on changing the industry?
I think in fintech, you said how will embedded finance revolutionize financial services? I think in fintech, very much we haven't seen too many revolutions, but a lot of evolutions. And in a way, I see the same with embedded finance. For me, embedded finance in a way is the logical next step. So I joined fintech in the year of 2014. I remember back then it was kind of I felt, from my way, how I see the development the last couple of years. Back then it was the first wave of fintech as we know it today. I remember a lot of startups talking about replacing banks and we don't need banks anymore. We just need the startups. Then the startups realized the customer acquisition and finding product market fit is really, really complicated. Then the second wave was a lot between startups cooperating with banks, which I think was another challenge itself. I think some of them made it successful, but a lot of others also struggled because just the mindset of startups and big financial institution, or the time they have at their hands is very, very different. And for me now, embedded finance is the evolution of that in a way that now it's not just the early stage startups, but bigger companies who have a business model already, who are making money already, who are looking to extend their services, and they partner with regulated entities. Can be traditional financial institutions, but can also be newer financial institutions who have the license, and both coming together. And I think the last couple of years were really necessary for for that we can have embedded finance right now, because consumers and also corporate customers have been educated about the possibilities. They're not used anymore to only use a traditional bank. They've tried different services. They've seen the advantages around that. So in a way, I think the timing right now is really, really right for an embedded finance movement. And we have seen, I mean, you all know it, right? Embedded finance has been around for quite some time in different areas, but I think right now is a way where it really can go much broader and bigger.
I mean, you made a really good point about that sort of evolution of fintech, and how in the early days it was very much replacing the traditional banking environment with a new breed of services. But it's kind of interesting. Sometimes when you write a lot about embedded finance, you get comments from the peanut gallery that the traditional banks don't really understand this trend, this topic. But I mean, are you of the thought that embedded finance really doesn't work without the involvement of the traditional financial players in that space?
I mean, like, first of all, I mean, different parties are required for an embedded finance product, right? Like, in my definition is always the front end, obviously the non-financial brand who delivers the product. And then these guys, of course, have to work with different infrastructure providers. Very often one is more on the tech side. Maybe another one is or another party has the financial license, or obviously can be also the same entity. I think, I mean, I always have hard times with kind of categorizing all banks together in a way. Let's say, okay,
Right.
those like this old school banks, they don't get it, and only those get it. I think it doesn't matter how long you're around and these kind of things. I think what really matters is what you understand, what these brands need, how the level of cooperation is, and how to address certain pain points. So I see banks who have a long history, who are understanding some of the things. They still have some of the challenges to actually make it happen because of various internal challenges, but at least they know where they have to get to. Others are also maybe not that old, but still not getting it and rather focusing on their own products. So I wouldn't categorize it, but another way, a good embedded finance product needs these three parties coming together at the right point of time.
Excellent. So I'm going to mix it up a bit. I'll go to Stu for the next question. I was looking for some real world examples of successful implementations of embedded finance and how they've really kind of enhanced and transformed the customer experience. So Stu, can you give us any of those?
Yeah, sure. And thanks, Lars. I think I know what category of bank we're in here today. I think one of the things is, I was thinking about the TikTok reference, and we know the phrase YOLO, you only live once. There's actually an example from 2017 in India, the example to your question, Liz, of You Only Need One. This was a super app that was promoted by the State Bank of India with some of its great efforts of financial inclusion. You might have seen India's, well ahead of its plans there for financial inclusion, to pick on something far away from the UK and the region where we are. It's a super app that collaborates with a wide range of partners, including online marketplaces, some of which you would know, the world's largest, to create kind of a unified and frictionless journey for users. So it's meant to offer them a couple of things. Number one, a convenient digital bank. Number two, a financial superstore, lending, giving them some micro loan products, that kind of thing. Also an online marketplace where they can get lifestyle products as part of this ecosystem, and an overall digital analytics component, which should help them kind of manage their life and understand what happens within this app. But again, that's a financial inclusion example. The next one, I think, besides combining banking and shopping and everything else, comes out of Brazil in 2023. It's called eAgro. And if you think about the desires of rural farmers to become part of a market, the marketplace that they need to be able to accept payments, make payments, finance and bid and advertise what they have to offer, consume items, and then track that and join an ecosystem, join a collective buying power, for example, buying machinery and equipment, used and new, agricultural management tools, weather patterns, all of these things in the agriculture industry present a really interesting case for embedded finance. I was reading about it. I'm sure you can. There's a lot more to be learned about it. But the wonderful part about this is that with the right backing and understanding of all those players that Lars mentioned, you can actually make a material benefit to real people doing the right things through this service. So those are two examples, I think, from different parts of the world that I find really interesting.
And I think you made a good point. I think there's so much innovation coming out of Brazil. It's really a country to watch in payments and other fintech advancements. So Olivia, can you share with us some real world examples of success?
Yeah, so I think certainly in other markets more globally, you've seen different super apps and things, but I think that looks different in the UK. I don't think we've kind of felt the desire for everything to be all in one platform at the moment. That's not what I've kind of seen. But I think something that's eased people in quite well to embedded finance from a consumer perspective is things like buy now, pay later. So it's an example of something where it's, at the point of sale, do you want to avail of this type of credit? People from, anecdotally, people who I talk to are very, very comfortable using that on an e-commerce site that they've maybe been using for many years. And then they think, okay, I'll add Klarna or ClearPay or whatever that is. Whereas some of those same people might be reticent to start using a Monzo account or a Revolut account because that's a little bit totally different. It's a whole new platform that they're going to have to go over to. So I think that has also led to an opportunity for the banks as well to kind of start to externalize their products through something like buy now, pay later, because sometimes your buy now, pay later will be through this third party. Sometimes it'll be white label through a bank. So I think when we look at the examples of embedded finance, there's probably two sides to it. I think there's, a large institution who wants to add some innovative products really quickly and easily. And that's where I guess MMOB kind of started coming from in terms of making those partnerships a lot easier. We're now seeing a desire for banks and, they're moving maybe a little bit slower, but I think it's because they're kind of looking out into the market and seeing what's going on to think, well, how can we externalize our lending products or our investment products and take advantage of that? Just to give a proper example, because I've been a bit vague, it was interesting to see, I think Monzo the other week has launched investments from BlackRock. Now it's open to sign-ups at the moment. And I think I was reading in the FT that 200,000 people have already kind of signed up. Now, whether they'll use it or not is another question. But this is far more than, a standalone app like Nutmeg actually managed to get in customers over many years. So again, it's how can they look at, okay, they're an institution, but where are their kind of customer bases that they haven't looked at yet? And how can they externalize those products? So it'd be interesting to see how much investment that gets when it actually goes live.
Interesting. And I share your view about, I don't think the entire globe wants a super app. I think it works in certain regions and doesn't work in others, but we'll see. So Lars, what are your views on real world examples?
I think that my personal focus at the moment as well, what I'm looking a lot from the embedded finance point of view is on vertical SaaS, specifically on the B2B side. I think I can quote there Matt Harris, who described it like quite well, like companies who have a sticky software, who have a sticky and data-rich software in the B2B space are very often very, very well positioned to launch financial services. So specifically on vertical SaaS, comparison to like traditional horizontal SaaS, where a provider takes a specific software, let's say an accounting service, and tries to make it work for everybody. Vertical SaaS really focused on one type of Drupal to make it work very, very well for them. So in the last couple of months, I was speaking with vertical SaaS providers who have provided services to veterinarians, to construction companies, to other kind of doctors or pharmacists. And because of vertical SaaS, how vertical SaaS is designed is like putting a lot of things together that makes sense for the target group. Banking or financial services is actually a very, very, they understand the mindset of embedded finance very, very quickly because they basically have anyway like grouped the right services together. And for them also very interesting part is also that some other areas in embedded finance very often only one embedded finance product, right, makes a lot of sense. So for example, let's say the Airbnb case or the booking space very often is insurance, and all the other things maybe doesn't make so much sense sometimes. In vertical SaaS, very often these companies start with payment integration, then they go to banking, then they go to lending and financing, and even there sometimes continue further. So very often there is a lot of interesting examples to be seen.
Wonderful. So we actually have a question from the audience. It's a slightly left field, so I apologize if you don't have a lot to say, but it's looking at, there's a lot of work going on globally to enhance the payment rails. So there's new launches of real-time payments. There's all the work going on with banks, with ISO 20022, with cross-border payments. How do all of those initiatives kind of fit in with the rise of embedded finance, if at all, do you think? On this one, you can raise your hand.
Sure. I'm happy to take this one. Thanks for the question. So the role here is product managing a lot of these rails, we directly connect to dozens of those systems. And one of the things to remember is that I think, we think about consumer experiences. We've talked today about the outside in experience, outside being, where the consumer is, bringing into the marketplace. But there's a competing and quite important interest for banks, which is the inside out. Dollars are managed by US Treasury. Euros are managed by the European Central Bank, and they have rules on how you can use them, how they can transact, what the systems are, how they move, and how much data can travel along with those payments. And then we have regulations which sit on top of these, both at regional level and then transposed into member states on how you should use certain fields, what should travel, and then the broad obligation we all have to each other as licensed payment services providers to pass information through the bookends of the transaction. So you really understand where the money is coming from and where it's going to. And so there are all kinds of challenges here because the bank's main customer might not be the true holder of funds. I mean, when you're buying something from a marketplace, that the marketplace will take a share before they give money to the seller. So there's a payment that's split. And a portion of those funds don't belong to the marketplace. They belong to the seller. And what's done with them in those days or hours before they're distributed to the seller? How do you treat that cash? And so within these payments, it does get a little bit, some would say complicated. The rest of us think fascinating and exciting. I think here, one of the things that ISO XML has done is allow us, that the XML, extensible markup, language, the ability to kind of shrink and move and bring richer data into payment systems. Besides real-time payments, some of which, were launched, the eldest of which is like 15 years old in UK faster payments, the true 24/7 version. These are still not entirely built on the extensible markup standard. So I think in short answer to the question, after my very long soapbox, there's a way to go, but there are some exciting industry movements, certainly in cross-border wires with the advent of ISO XML in the bank to market infrastructure layer. So inside out, right, getting all the way out, that will allow us to, communicate with more rich data between ourselves as banks and then enable a more frictionless experience for consumers. But in the card space and in the core rail space, there's a long way to go. And as you look globally, SEPA in Europe was a great example and the first, which really thought from inside out the difference in concept between the person holding the bank account, that entity, and the true initiator or beneficiary of the transaction being somehow different. That's the only payment rail on earth that natively understood and built that from the ground up. All the others, there are places to put information, but it's an exciting space to watch. And in some markets, you have to make some adjustments, and in others, it works out of the box. Long answer, Liz, but not a left field question. One we love.
Excellent. Oh, good. I'm good. I'm glad you could, but I apologize. You gave a long answer, but I'm going to stay with you, Stu, because I really wanted you to go into a bit more detail about, we hear a lot about the future is offering these, personalized, tailored services to customers. How does embedded finance really enable businesses to be able to do that?
Well, I'm sure there are a lot of examples of this. I'm, looking at Lars and Olivia. One of the things that I see is that a brand partner can be presented with more data through an embedded lending product. For example, let's say that an embedded lending offering presents credit to a client, and the brand can see that the client has used 1,000 of 5,000 in the credit line. That might drive advertising from an electrical retailer. And if they bought a PC with that 1,000, to say, a marketing campaign should focus on extra equipment or televisions or surround sound or something. So, as long as this is done in a responsible way, it gives brands access to a new market, those that are willing to spend with credit. There are all kinds of data elements that can come together, but there's a lot of information that a consumer is willing to share that a brand might not have access to today. And through the presentment of embedded finance or payments in a marketplace type of app or other, there are new opportunities to grow business.
Excellent. So Lars, I'm gonna move on to you. I mean, I wanted to talk a little bit about some of the key technologies and APIs that enable the integration of financial services into non-financial platforms. Can you go into that a bit?
Yeah, sure. And I think, looking at embedded finance, and again, when we speak about embedded finance, we're talking about payments, banking, lending, insurance, investing, like these 5 main financial products, right? And we have seen, let's say, different cycles of developments over the last couple of years. Perhaps payments or also banking were the ones that have been made available to third parties in a very early time already. And obviously, we have seen different models, right? I mean, I'm based here in Germany, so my company that I'm thinking about in the banking as a service space, I have to think about Wirecard as well, but also, of course, Solaris, who was taking the model to a banking as a service model a couple of years ago, and were some of the, let's say, from the current wave, some of the first movers. But I think the main difference that we're seeing in the banking space, but also in the wider other financial service space or in the embedded finance space, is that we have now more and more companies who are leaving the area of purely selling to fintechs and going to other industries as well. I'm not saying companies like Solaris are not doing it, but they have obviously started initially focusing on fintech financial services. And I think the really the challenges or the embedded finance focus on non-financial brand is a very different one. It's at the end of the same product. I mean, the companies that are launching the embedded finance brands who launch these cards and accounts is doing the same as maybe a new neobank or all the other fintech companies. It's very much the same, but the product they want to consume, they need, is on their level, which they can achieve integrating is very, very different. So I don't think it's a completely new technology being used that is like a main driver. I think it's the willingness, the openness of non-financial brands to look at these options and wanting to consume them. And at the end, I think that's one of the biggest challenge around embedded finance is obviously you're selling in a way as an infrastructure provider or financial institution. You're selling to somebody who, by the definition, has no idea about financial services. Obviously, that person, that team might have some exposure to financial services in the past, but very often they have not. And obviously, you need to offer them a product which makes them build a great customer experience on top of it, but not making them too heavy requirements or too big requirements of actually building that. So traditional banking service, again, has been too high of a bar for many non-financial brands to integrate. Maybe only very, very big corporations had really the efforts and resources to invest maybe a couple of million euro, pound, US dollars to build such products. Now it's a lot less cost intensive and through that also accessible for some of these companies. And again, we are seeing, I've now chosen like the banking product. I think similar developments we're also seeing in the other ones. And it's not really new technology by definition, but more products being offered and sold in new ways.
Yeah, that is kind of the takeaway of this age, how much easier it is to create and scale products. But Olivia, I wanted to go back to you because you touched on briefly earlier about how embedded finance can impact financial inclusion and accessibility. So I really wanted you to go into a bit more detail on that, on how that really can reach out to some of these unbanked or underbanked groups.
Yeah, absolutely. I think it's kind of, as Stu and Lars have touched on throughout, it's a natural evolution. I think a lot of the work we've done in fintech over the past several years now is kind of coming together, and it kind of touches on your personalization point, I think, as well there. I mean, for a few years now, we've been able to be told, okay, you've bought 5 coffees this week. And at first it was kind of radical and we thought, well, how does it know? And now I'm just kind of going, okay, I bought 5 coffees, stop having a go at me. But what you can now do is you can
judging my lifestyle.
Exactly. Yeah, you just feel judged, and then nothing else. There's no further help or support there. So what you can now see is, I guess, kind of financial well-being aspects being put into place there. And where embedded finance can fit in is by taking that data, as Stu mentioned, that your apps and platforms will have, and say, actually, we notice you spent quite a lot in this area. Can you actually maybe put that money aside into this savings account, or could you round up your savings or invest it, or whatever that may be, or even just looking at financial tools there as well. In terms of some other examples of how it can affect kind of underbanked people, I think you're seeing a lot of things like affordability tools now being embedded into platforms. So where somebody may need to go through lots of credit checks, may not have a great credit history, you see a lot of the kind of affordability data and things like that is being used within an app so that they can even start an application, start a soft credit check, understand maybe whether they would be eligible for something, and then before they choose to go on and purchase it. And that's where maybe that could lead on to a fully embedded journey of someone saying, yeah, I'm eligible for this, I can go and purchase this financial product, or I can go and get this loan. Or it could actually be, you're not eligible for it, and then you can start to think about what are your other options there. So I think there's that aspect as well. Now, I think there's kind of a dangerous point there. We kind of joked about TikTok earlier, But I think the more you open up these kind of different products, different financial products and services into non-financial channels, you do reach a wider audience, and you're seeing that already. You know, TikTok's got this TikTok shop, which I'm proud to say I haven't actually clicked on yet, but, you know, selling different products. And you also unfortunately have a lot of influencers who the FCA has recently cracked down on because they're not necessarily giving the right information to people. But I think if that can be done in a responsible way, and you can access a younger market, and you can start to teach them about financial well-being, about different savings accounts, about what could be the right product for them, and then they can kind of access it through those channels, I think that could be a positive thing. But it's something I would kind of be very cautious of at the same time.
No, it's interesting times, and I'm afraid there are many things that TikTok made me buy. I'm not ashamed to say, but Stu, you have some views on this as well, on how it's reaching out to other sectors of society.
I do, and like Olivia, I'm conflicted by some. You know, one of the things before conflict, Olivia, to drop that one there, was you know, domestic workers in Mexico, nannies, housekeepers, cleaners. When you think about, you know, attitudes that might be uncomfortable walking into a bank or going to a financial institution to manage a small business effectively of themselves and their livelihood, you know, there's a platform there which had about 25,000 users, as Zolvert, and it, you know, enabled and partnered with a bank to enable lending to some of those folks and give them access to a bank account. And so it's an interesting way to think about accessibility and inclusion and community, really, with those that otherwise wouldn't have access to financial services and clearly need them in some degree. It is a fine line, though, and certainly when you think about marketplaces or others that are not regulated, what are the controls and toll gates that ensure that they're really doing the right thing ethically, morally? One of the other mentions we talked about was, you know, subscribers. Olivia, you mentioned a neobank that had, you know, done a partnership with an investment company. When you're reading through this, is everyone just tapping through? Is anyone reading all of these when you accept the terms and conditions? What is success measured like? Is it number of subscribers? Is it true wealth creation? Is it true access to new products? Or is it just, you know, trading and fee income without really looking at the experience of that user? So I think it's a fine balance, but there's clearly a role to play. If it's controlled well and responsibly, then it can be a net positive, I think.
So I'm going to stay with this before I move on to the next question, because there's a question from the audience that I think kind of relates to it, which is what happens if an embedded finance service fails, you know, and it doesn't work? What are, like, who's at fault? Like, where does the buck lay with that? Anyone have a view?
I think,
Yeah.
sorry, Lars.
No, please go ahead, Olivia.
I was just going to mention, I'll probably make quite a broad point, and you can add some actual intelligent thoughts to it as well. But just the broad point I would make is, you know, I think we always get caught up in, well, why isn't everyone doing this? It's so, you know, it's such a great idea. In fintech, we're kind of running ahead of ourselves a little bit. And I think at the end of the day, it's the brand, the consumer-facing brand, that will suffer if something goes wrong. You know, I don't really, if I buy, you know, an insurance product through my challenger bank, that's my experience with the challenger bank. And so if something fails or goes wrong, it doesn't really matter whose fault it is. It is the consumer-facing brand that will get the rap for it, essentially. And I think that's why it's important to have obviously a lot of trust in these partnerships, not to kind of enter into it lightly. But I think also there are ways, this is where I think white label products and embedded finance can be different, because if you're white labeling something, you're presenting it as your brand. But actually embedding something, it gives you the opportunity to almost say, this is something that's in our marketplace, we're delivering it through a partnership. And there are ways in the user experience you can make that very clear to the customer. So that can help a little bit, but at the end of the day, unfortunately, it stops with the person who is selling this and presenting it to the customer. And I think since, especially with Consumer Duty coming in the UK, looking at good customer outcomes, a lot of companies are starting to be a bit more cautious, because anything that's on your platform, you know, you're seen to be advertising and promoting that. So you really have to be careful. Obviously, also, it's the right thing to do, not just about Consumer Duty. But yeah, at the end of the day, it's your responsibility that you're sharing the right products. And I think to Stu's point earlier as well, there's a fine balance between saying, we think this product will be really useful and suitable for you, and just selling people stuff that they don't need.
Yeah. So Lars, do you want to expand on that?
It's actually exactly the point I want to make as well. I guess in the, like, I mean, it depends, of course, like what what went wrong and with what financial product and what exactly happened. But I mean, at the end of it, from a contractual perspective, if the regulated entity has done something wrong, then very much that entity is responsible for recorrecting this mistake and is liable basically for damages or whatever went wrong. But obviously, as Olivia pointed out, that's maybe not the most important part of the whole thing, who covers up the mistake, but who really suffers from that development. And that's very often the non-financial brand. So the non-financial brand has to be like, in a way, also very much understanding what can go wrong, what the challenges are, and how to respond to it.
I mean, saying that, I think one of the beauty of embedded finance is usually the financial product comes from a secure, regulated, financial entity in the first place. But I think a lot of financial institutions have been wary about getting involved in these types of partnerships and relationships because they kind of lose that connection with the customer. They lose ownership of the product. I mean, Olivia, I'll go back to you. I mean, how can that partnership be eased? How can that the traditional financial institutions be kind of more happier to partner with non-financial players and fintech players to create an optimal embedded finance experience?
Yeah, I think, as I say, there's a few different, I guess, choices between how you want to present your brand out there within a different digital channel. So do you want to make it very clear this product is coming from you? Maybe you don't. Maybe actually your brand is a bit of a problem in that it's not something that's seen as accessible for certain age groups or certain types of people. So maybe it's more beneficial to you to kind of not really make that the center of it and just offer it as a solution through a different channel. But I think that's where you think about the user experience, which is the kind of distribution channel's responsibility, but then the onward journey you're offering, and how do you do that? And with MMOB, we've seen lots of different ways around that. There are ways where you can add a consent screen, which is very simple. There are ways where you can co-brand things, or you can be completely white label, and we find that often depends on the type of product. So we also work with some non-financial products. Those ones often are, utilities, broadband. They don't really mind if people see their brand as long as they reach the right customers. But when it comes to making, an investment or taking out a loan, particularly a kind of larger loan like that, the customer and everyone wants to make sure that it's known where this money's coming from. I think that's where I see it now.
I wanted to move on to talk a little bit about the evolving regulatory environment in this space, because it's sometimes it gets left out of the conversation. How do you see, Stu? I'm going to go to you first for this. How do you see the regulatory environment evolving to accommodate kind of the growth in the embedded finance sector?
Look, it's an interesting question. I think we have regulated and unregulated players, and regulators for certain business activities are often benefiting from the advice of open practitioners in the space. So, there's an intent that's usually clear with a regulator, but, the regulator doesn't always have the benefit of the customer portfolio, for example, that I as a bank would face off to. And so, a lot of collaboration is required between, the regulated party and the regulator itself to try and understand what is happening. I think the difficulty here in this space is the industry coalescence you would need for a set of players in a market offering embedded finance services to come together and act as a think tank to inform that regulator in a way to help it be effective. And that's a really, really key ingredient. So, we're no stranger to regulations in Europe, certainly as a regulated institution ourselves with all of our entities. But that open dialogue does help us inform exactly what the right way forward is. And maybe it's just me, but I don't know what a destination for a regulator in a certain market would be to better declare rules and, a cooperating contingent of people that could define what a great embedded finance experience is. Maybe Olivia, you or Lars do, but I see that's one of the challenges. I think we know what the role should be to protect the consumer, to protect the system from failing, to ensure that it's not just done at the outset, but you have regular ability to audit and see what people are doing. Do they have an ethos? I'm talking about those providing embedded banking services. Do they have the ethos to self-identify risks, regulate, patterns, and then raise them to a regulator proactively? Is that culture there to say, we anticipated this at the outset. We didn't really understand that our users would use it this way. This is a problem. This is how we think we should fix it. Regulator, what do you think? that's the way that a good cohesive industry collaborates together, and one of the ingredients we would need. But I don't know what the others think, but I can't yet cite to you a very prominent body that would help inform a regulator on how to do that.
Yeah. I mean, and also that regulators in different regions work in very different ways as well. That's another issue. So, Lars, what do you think? How is the regulatory environment evolving?
Yeah, just to think about it. I mean, as mentioned, I'm writing like a bi-weekly embedded finance newsletter, and just like recently there was a story, I think, in the US around Goldman Sachs and some of the issues with their fintech unit there with the regulator. And in this newsletter, I made this joke like, when you write a newsletter every 2 weeks about embedded finance, like every time you could pick an issue that's happening in the broader banking as a service or embedded finance space where this comes evident, where the regulator is investigating or taking certain actions. I mean, in Europe, obviously, we had also some failures of banking as a service companies that have been similar. And I think at the end of it, like again, it comes to what we said before. There is infrastructure provider, regulated providers who know the space very, very well, and now they work with somebody who has no idea about the space. And there's very much a change in model happening. In the past, it was very much, okay, I work with fintech or experienced teams, I hand over responsibility to them, I check them in audits and these kind of things, which was not perfect, but in a way, I think it was quite suitable. Now you have a lot more where the technology should be built in that way that the regulated entity is taking care of some of these things, and the non-financial brand just have to execute the financial product. But I think in the intersection, there's still like so much more room for challenges or for obstacles. I think for a regulator, I mean, I've been a bit involved in the open banking regulation back in the days, realizing how far away very often regulators are from actual real life use cases. So I'm not sure. I don't want to talk badly about anybody here, but I'm not sure which regulator would be in position to actually understand embedded finance inside out and make regulation that's really suitable for embedded finance. Maybe that's even not really required, but more setting a framework of making sure that consumers are protected and those companies who are regulated are doing their best or more than that to obey with the things in place.
I wanted to have a wider conversation about the different industries that are being impacted by embedded finance. And this kind of relates to an audience question as well. I mean, we've talked about insurance, which seems like a natural fit for an embedded finance. Someone mentioned agriculture, which I have written down fintech agriculture as a future feature I might work on in the next few months. Where do you think there'll be the most significant transformation in that non-banking space for the adoption of embedded finance, and why do you think so? Olivia, I'll go to you for that first.
Yeah, so I would just build on the insurance point, not to kind of go into it in too much detail, but I think insurance is primed for a number of reasons. I think the business model of insurance works, what we've seen from aggregators, from selling insurance products to other platforms. The industry itself is kind of used to that model. The consumer is also used to that model. They're used to getting their insurance through various platforms. And I think there's an opportunity for non-financial brands, e-commerce and different players like that, and SME facing brands to say, you're at this point of purchase, you've bought a product, would you want to get some insurance with that? And it kind of makes sense. So I think that's something in the near term. And it's also something I think on a wider fintech perspective, it's waiting for that fintech wave that we had a few years ago. I think maybe the insurtech is starting to develop a bit more there. In terms of other kind of sectors, I suppose where I would talk about MMOB would be embedded services as opposed to just embedded finance. And I think actually when you're talking about being kind of worried about the regulatory side, maybe this is a really good start for certain brands who want to start thinking, well, can I offer some other products? Maybe they're a travel brand and they start to offer different kinds of hotel bookings or products that aren't necessarily a financial product. But they can bring that to their customers and see if embedded services is something that's right for them before they go into these kind of regulated products. So where we've seen things like that are kind of lifestyle products like loyalty products, as I say, travel booking. You could add those into your e-commerce platform, for example, quite easily, as we would all say, but without too much problems of, am I offering a financial product that might be irresponsible to my customers? We'll see, returning, especially in the cost of living crisis, with utility switching, broadband switching, different aspects like that you can kind of start to introduce without having to go down a full-blown regulated financial product. So I would say outside of the finance space, there's a few interesting aspects there.
So in the last 15 minutes, I'm going to focus on two main questions, and I've been thinking in my head which one I'm going to ask first, but I think I always defer to a positive question last. So I'm going to start with the challenging question, and this is: if embedded finance is the future and so powerful, why isn't everyone doing it? So I'm going to start with Lars for that. Why isn't it everywhere yet?
It's a good question. I think, at the end of it, I think we in our bubble of fintech, or even specifically in embedded finance, of course, we understand these things very much inside out, right? What I've seen in the last couple of months, talking to brands, understanding the brands, there's obviously very much a knowledge gap happening, right? We're obviously just being aware of understanding. So many times when I chat first with companies, with vertical SaaS companies around the possibilities of embedded finance, and this is also here in Germany very often the case, they're concerned around that because they see a lot of challenges for the brand on one hand, what we discussed before, but also they envision a lot of complexity, and they shouldn't really getting into this. They don't really feel the need to compete with banks. I think what's here really important is the educational aspect that very often in these areas, you don't necessarily need to compete with existing financial institutions, with banks in that example. You don't have to convince all of your customers to use a financial product. At the end of it, what it is for perhaps a subsegment of your customers, but a relatively decent sized one, to build a feature, a product which creates a lot of additional value. And I think that's basically the goal. I think the education gap is a very, very, very big challenge. I guess we are here to, in a way, address some of that. So I guess us talking to the outside and not just inside in the fintech bubble, but also the outside fintech bubble to transfer this message is an important one. And on the other hand, also, I always refer to, we talk now about in these days, we talk a lot about Shopify, the role model for embedded finance. And we're looking, when did they start their first embedded finance product? That was 2016, 2017. It takes a bit of time as well, right? So in a way, I think everybody who has spent a bit more than a couple of weeks in working in the financial service industry knows this takes a bit of time. You cannot expect that you talk today about embedded finance and 6 months from now, everybody's doing it. So I would rather look 5 years, 8 years down the line to see the impact in.
So it's almost the fintech world is having a bank timelines coming in. Anyway, Stu, what if embedded finance is so big, why isn't it everywhere now? What do you think?
I love the challenging question. The mood is right. I think, we look at companies, you could categorize them 3 ways. You have digitally native, e-aspiring, and traditional corporates, I guess. And in these, if I asked who's in charge of embedded finance, how would they answer? You could understand that some of them would say, well, I have a central treasury and cash management team. I'm here today at a cash management conference nearby where they're thinking about third-party cash and how that's managed for their lines of business. That's a very complicated question to understand who's responsible for the counterparty risk, the lending products. Maybe digitally native companies, head of brand or someone like that might have a great mandate from the top to be able to affect the change and present embedded finance to their customer base. But I look organizationally and find, a few companies, at least those that maybe could most benefit, understand who's ultimately accountable for this and could deliver it end to end and would be able to have ownership across quite a few separate silos of business, the e-com team, certain market management teams, which might just own a geography. Then you have legal entities that are involved. I think that's one of the main challenges is if you're digitally native, maybe it's not so much as a challenge. It's your core business nature. You give yourself a head of payments, for example, whose job it is to make that experience great across your company. And several, hundreds of years old companies have done that. They've put a head of payments in charge of how this experience is supposed to work, or head of marketplaces. These kind of roles are existing at some companies, but that's one of the challenges I see. And, it feels like if, we brought Lars to every company and said, look at the power that we could have here, we would still have quite a few people to convince. So it's the consequence of where we are in time, I think. But it, like any good idea, it needs two ingredients: one, to be a good idea, and two, to be able to rally others to its cause.
Mm-hmm. Excellent. So, Olivia, what do you think? Why isn't it
yeah,
everywhere?
I agree with all those points. I think if I was to show empathy, I would definitely say we've just talked about all the things that can go wrong and whose fault it is and who gets the blame. So this is not a kind of small undertaking, and we are still in a relatively new space. So I understand that the hesitancy there. If I was to be less empathetic, I would say, unfortunately, a lot of companies have kind of already said they are doing embedded finance, and that might not be the case. And I think I understand that. I understand wanting to dip your toe in. Maybe you've built a marketplace that has some affiliate links or some account signups, and it goes off on that journey into your provider's website. And I get it, but it's not the optimal experience, unfortunately. And I think the danger there is actually that consumers will go, that will be their first experience of embedded finance, and they'll think, okay, that was a bit rubbish. Or even the distribution channel will say, we didn't actually get a lot of revenue from this and a lot of registrations for this product. So I think it's difficult, because I think it's something, I've mentioned some ways you can dip your toe in with non-regulated products, but when it comes to the journey, I think you have to either go, right, we're going to build this embedded journey or not. And I think that's a very scary thing for people to dive straight into, really.
So I'll stay with you, because I want your final words to be about advice. What advice would you give to the different players that exist in that embedded finance ecosystem when they dip their toe in to make it less scary? So Olivia, I'll stay with you. What would you say?
Yeah, so I think for the product or service provider that wants to embed through different channels, I would say make sure what you're doing is scalable. We've seen, and this isn't unique to embedded finance, lots of kind of fintech and enterprise partnerships fail because you're working to build something for a partner for 6 months to a year. Maybe it works, maybe it doesn't, but you run out of money and time and possibly sanity in the meantime. So think about, how can I build a journey that can be then easily embedded into a number of different partners, and how can this be scalable? Don't kind of start it off as a one-to-one integration. That's definitely what I would say. And then if you're at the distribution channel, so if you're someone who's wanting to add new features, I would say do that sensibly, have a bit of imagination, but focus on what is your core offering. So if you look at something like Revolut, they started off people using the card to spend money abroad. So they started embedding in, travel, holiday, things like that, travel insurance, airport lounge access. It all kind of makes sense. I think it's not the time to kind of start adding in too many products and kind of starting to think of things that aren't maybe as relevant to your customers. So use all that data that you've got, from years and years of collecting it, and start to think, right, what do our customers really need, rather than kind of what's the most cool tech thing that we can integrate.
Interesting. So Stu, I'm looking for advice from you. What would you give for people dipping their toe in?
Yeah, I'd want to bring Olivia to the meeting. I think I agree with all of that. I think the idea, I would say, be excited by possibility. I think the fundamentals of starting small are good. I had my own response plan, but I just agree with so much I just heard. I think at every corner, when you're excited by success, ask what the risks are. One of those risks is rapid success. 200,000 customers tomorrow. What are you going to do? So I think this is one of the things that you need to think about, because these solutions don't scale like anything else we've seen before. They are explosive, for lack of a better word. So I think that's kind of exciting. I think obviously I would say choose your partner wisely. You represent a very interconnected and highly codependent model when you deliver these services. So your contractual terms with your users, be sure they're fluid and cater to the risks that you expose yourself to. But after you learn all that, enjoy the success.
No, there is no such thing as too much success. So Lars, why don't you give us some final advice for people looking to get into embedded finance?
Sure, and I think I would highlight 3 points, and obviously I don't want to repeat everything, but what my two colleagues said before, which was a lot of good things as well. I think first of all, think about where you as a company and maybe your industry are towards the embedded finance journey. I think some companies have a lot more pressure on themselves to do something in embedded finance than others. I don't know if you, for example, maybe a CRM portal, then maybe embedded finance is not so important as if you're in the invoicing or accounting space. So I think that's very important to understand how your competitive landscape is and how much pressure and quotation mark you have to do. Then secondly, I think every company right now in embedded finance who wants to build an embedded finance product or launch an embedded finance product as a non-financial brand is very, very lucky that there are a lot of options out there. Yes, it's of course a lot of options also means very hard to navigate, but there are a lot of options out there, and there are a lot of options out there which are a lot less cost intense to test and to try than in the past. So I think it wouldn't harm to perhaps even have certain kind of like, let's say, MVPs or solutions to kind of dip your toe into the water, because I think, again, the Shopify example, it's not like within one launch, one week, 1 month, you will know everything. So in a way, it's finding ways to start early. And the third point is maybe subscribe to my newsletter and read some stories from other companies, what they're doing in embedded finance, and in a way keep up to date what's happening through that, and learn from them.
Excellent. Well, on that shameless plug, excellent. Thank you, Stu, Olivia, and Lars. That has been an excellent discussion on embedded finance. And I want to thank Marketa as well for hosting the API Chronicles. So thank you very much. Goodbye.
Thanks.
Thank you.
Bye.
Thank you.